move on. Remain invested in the market as long as the long-term outlook remains very positive. That's the word coming in from Raamdeo Agrawal as he discusses market valuations and the recent mid-cap correction with Surbhi Upadhyay. He also expects the Nifty to compound at 15% every year and double every 5 years. Listen in.
So how do you look at the next 3 years, given the fact that it's been pretty much a nice one-way ride from COVID onwards?
Correction will happen. Don't ask me when and why.
Okay.
But it will happen. It has happened for last 40 years, it will happen again. You know, what will spur that? I don't know. It might be just the supply. There will be so much of supply that every day you are taking $1 billion from the market by block deal. Clearly there will be correction. People will get fed up.
And now government is not even selling. The PSU divestment is not even started.
Yeah, so government should also sell. This is a golden opportunity for them. I think post-election, the new news FM or whosoever is in charge, DPM and all, they must sell. If they don't sell, then there is a vested opportunity. Because they must use, by selling 2 lakh crores, they must go and build whatever fancy roads they want to make. Instead of 4 lane, you must make 8 lane roads. But you must sell. So clearly, I mean, see, the overpricing is not a healthy thing. If something should trade at 15p, and if it is trading 35p, see, the person who's holding the stock, he loves it. But it is a completely wrong thing. It is not healthy at all for the market. Someday it is going to collapse.
So correction will happen.
Correction will happen.
But next 3 to 5 years, what kind of a market are we looking at, and how should we gear up? How should our portfolios be ready for it?
Yeah. So it is dependent on the fact how the corporate profits move. If a company keeps making losses, it is worth $5 only. Whosoever is buying, it doesn't matter. God comes to buy, then also it is worth 5 rupees. Because it is making losses. So if the earnings, which is say Nifty earnings, let's talk about broad. So this year, our guys are saying that we will earn anywhere between 980 to 990, 975, something closer to $1,000. Next is the forecast, what they can see as an aggregate is about 1150. So they're saying about 15%
earnings growth.
Earnings growth is possible. And now that could be in reality, I mean, generally things are going better than what they're saying. So it could be 1170, 1180, that as time comes, they will revise. I mean, it also depends on rate cuts and whole lot of things. So, but then trajectory of the earnings is about 15%. My multiple, see, it is P multiplied by earnings. So earnings are, this is the outlook for the earnings. P multiples are pretty rich at about 21, 22. I would say that if it is, say, 20P, so that gives me a minimum of 23,000. And if it is 22, then you can do about another 3,000. So we might end up at 25,000. That is the most optimistic, I would say. The outlook is clearly, you know, going up and up right now. The momentum is positive, PMI is positive, everything is looking good. Tax collection is very powerful. Every month you get the high-speed data.
Correct.
You know, so tax collections are very strong. In fact, it is beating the government expectations, revised budgetary estimates also. So clearly everything is, right now, there is no reason to say that earnings are going to collapse.
So as we look at this wave, where we are probably 2-3 years into this bull market, what is the one lesson that you would want everyone to remember?
One is don't time the market. It will always give you a lot of jitters unnecessarily. There could be sharp correction, there could be deeper correction. Stay invested. Have faith in this country's future and future of this market. It can give you pain for sure. Nobody can guarantee you a straight kind of thing. But in last 40 years, I have seen when things were not as good as what it is today, things were not looking as rosy in 2000 or 92 and all. Still, it has given 15% return compounded. And you know, power of compounding. So better your investors know power of compounding first to really feel the future. Because future you can see only with the past. If past has compounded for 15% for last 40 years, I have no reason to believe, to say it will be even 14.5. I would say rather 15.5 because of optimism, but I would say stick to 15 only, or rather consider 14.
Okay.
And 15 means you're saying every 5 years it will double. Every 5 years. So let's live first 5 years.
That's index will double.
Index will double.
15%.
Of course, then you should do much better as an active participant. So 22,000 will go to 44,000 next 5 years. I would think in 5 years, index should touch about anywhere between 40 to 45,000.
All right, so pearls of wisdom about market investment coming in from Raamdeo Agrawal. All right, with that we'll slip into a short breather.